This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. This is the Definitely Uncertain podcast, and my name is Darren Rockman, and I'm a partner at Goldrock Capital, the 21-year-old multifamily office servicing high net worth families in Israel and around the world. Welcome to Harel Tow. Hi, Harel.
Hi, Darren. Good afternoon. How are you?
So for those, I'm great. It's a little cold outside today. It's a blustery winter here in Israel. For those who may recall, Harel was last on our podcast back in August of 2020. He is a partner in the International Tax Department at KPMG in Tel Aviv and a super professional. So we've asked Harel to come and give us a little bit of update on what's going on with regard to international taxation, and specifically the reform of international taxation, which is currently being discussed by the Israel Tax Authority. So Harel, in November last year, November 2021, there was a proposal published by the tax authority. I don't think it's clear to anybody exactly what's going to be legislated ultimately, but let's just sort of touch on what's being proposed and where things may go. So let's start with the following. How do you think that the residency rules may be changed by this latest proposal?
Right. So I will begin by thanking you, Darren, and thank you, Goldrock, for inviting me again today to participate. It's always good to see you. Regarding the international tax reform, just to set the stage, the Israeli tax authorities, this round, they have sort of engineered the situation vice versa compared to other rounds. They have first, and they have been discussing and negotiating with the relevant parties from the Lawyers Association and the Israeli CPA Association.
Okay.
Luckily enough, KPMG was part of the committee, and instead of bringing the proposal and then discussing with the relevant parties for 2 or 3 years to hear their comments, the draft legislation that has been published in latest in November is actually after almost all the comments. So effectively, we're talking about a very, very advanced version of the proposed legislation, which unsurprisingly increases the likelihood for it to pass as is.
Right.
So now everything is public, and it's open to the public, the draft legislation.
Okay, so as you say, setting the stage, what we're about to talk about is probably more likely than not to become law. Is that what you're saying?
Absolutely.
Okay.
Absolutely. And in its current shape.
In its current form. Okay, good. Yeah. All right, yeah. Terrific.
And now going back to the specifics. So residency in Israel, it's something that we deal with all the time. The general, or I would say the lead criteria is the center of life, which is a bit of a broad concept. So the Israeli legislature, where things currently stand, relates to the place where one lives with his family, economic ties, where one is involved in business, and softer ties, like where if one goes to Bet Knesset or to the gym, and so on and so forth. All of these,
or both.
Or both, or both, would actually provide for a tax residency as to whether or not one would be considered an Israeli tax resident.
Okay.
So that the qualitative test, and in addition to that, there are numeric tests. Yes. That are presumptions, what we call presumptions that could be contradicted. Okay, that's the current situation. That part of the law would stay. So in other words, The center of life is not going anywhere, and the numeric disputable presumptions are not going anywhere. But in reality, what has happened also to us and to other representatives throughout the years vis-a-vis the Israeli tax authorities is that once you have a gray area in the tax law, there are endless of tax audits and tax negotiations with the Israeli tax authorities. You can only imagine the dynamics.
Yes, of course.
And that's something that the Israeli tax authorities want to avoid going forward. And for that reason, they have now came up with a number of non-disputable presumptions, what's called in Hebrew chazakot chalutot. In other words, non-disputable assumptions, and which are based primarily on the number of presence days, and then subject to certain conditions. So, for example, the lead example is that if one would be in Israel for 183 days for 2 consecutive years, then one would, by definition, at least based on our domestic tax law, that person would be considered, for all intents and purposes, as an Israeli tax resident, and as such, with the exception of new immigrants, etc., would be subject to tax on his worldwide income.
Okay, so they've narrowed down the room for dispute around the number of days, because that day count was always something, was a presumption that you could rebut until now, and you're saying this is now a non-rebuttable presumption. So
let's say the broader number of days presumptions would remain in place, but in addition to that, there would be a number of tests, let's say, or non-disputable presumptions that if one meets them, then one would be either considered as an Israeli tax resident or as not a foreign tax resident.
Understood.
So we are currently working with a number of our clients also that are considering to leave the country about strategy of how to build this in a way that would be non-disputable also to the in a good way for their from their perspective. Mm-hmm. A good example is there is one relatively young guy who is a very successful tech entrepreneur. Mm-hmm. And he's now heavily involved in a European. They're entering into the European market, so he wants to be in a place where the COVID restrictions are lighter compared to Israel. So he's moving, in all likelihood, to Greece for business reasons. And if the legislation were to be in place, then there are a number of new factors that should be taken into account, including the presence days during the first 2 months of the year. So these are the kind of things that we would probably be paying close attention to and planning ahead post reform.
Got it. Okay. You mentioned before new immigrants, and of course, many listeners to this podcast will be particularly interested in the question of the 10-year tax holiday, which new immigrants and some returning residents are entitled to under the current law. Is there likely to be a change under the new proposals to that 10-year holiday?
Right, that's a question that we hear very often, and I know that there are numerous rumors in the market as to would things change or not. There would be no dramatic change, but unfortunately, it's not as simple as as with everything I would say in this country. There were discussions with the tax authorities. They wanted to cut the time frame from 10 years to 5 years, and then they came up with this linear, very complicated formula that provided for a partial exemption. The bottom line is that the 10 years tax exemption is not going anywhere and is here to stay. But the reporting requirement, which is currently still part of the law, would probably be canceled. So in other words, if you're now a new immigrant and you're making Aliya after the legislation would be applicable, you would be entitled to a 10 years tax holiday period regarding your foreign sourced income and foreign sourced capital gains, but you would still need to report. So there would be more.
So that's a big change, because until now, unless you had Israeli sourced income, you were able to effectively not report until the 10 years were up. Is that going to apply to immigrants who have come here in the last 10 years and are currently in the middle of that 10-year holiday? Or are we only talking about people who arrive tomorrow or the day after the legislation passes?
Right. The position of the Israeli tax authorities throughout the discussions was that that should happen. In other words, that because we are talking about a compliance change rather than a material change, that even for people who are in country, that should that the reporting requirement should be canceled. But where things currently stand, I mean, in all likelihood, that would not fly, and that would not be part of the legislation, and it would only be applicable to people who are coming from going forward, because generally in Israel, retroactive legislation is only regarding criminal criminal
Right.
situation. So that's irrelevant to us, irrelevant to our listeners. So yeah,
of course.
Yeah.
So the lesson is come quick before the before the good news ends, or at least partially ends.
Exactly. So that's one of the, let's say, immediate advice that we're giving to people. If you're debating with yourself, things are uncertain, certainly uncertain, or
definitely uncertain.
Definitely uncertain. So exactly. So for those who are currently considering to make Aliya either in 22 or in 23, I think that this is a good incentive. Not even to to get something out of the Israeli tax net, but simply to not to be in a heavy compliance burden. Because once you start filing returns, it's extremely heavy in Israel.
Yes, of course. There's one thing which has always surprised me about the rules as they exist at the moment, and it sounds like they're not going to change, which is it gives the tax holiday applies only to non-Israeli source income. Which means if you're employed here, then you pay tax. But it also means that if you invest here during that 10-year period, then you'll be paying tax in Israel, which if you're trying to encourage your limb to come and actually make investments in Israel, it is a bit of a strange thing, effectively to disincentivize people from making those types of investments. In the discussions, and I believe you were part of some of them, did that point ever come up? Did anybody ever consider whether or not this was smart policy?
Right. So I think that there is a very specific point that was discussed in the previous round of negotiations with the Israeli tax authorities. There is no question mark that Israeli sourced income, Israel has taxation rights, and that portion should be taxed. Mm-hmm. The view, and it's also reflected in the current version of the law, is that if you had investments in Israel that were made in, like for example, if you invested in an Israeli tech company before you made Aliya,
right?
So that would not prevent, in order not to prevent people from coming, that would still be exempt from tax in Israel. So I think that, it's a very good point, but I think the current version of the law also is trying at least to sort this out.
Okay. All right. Interesting. So moving on to a slightly different topic, people not coming to Israel, but people leaving Israel. There is some discussion or in the proposal around an exit tax. Do not pass go, do not collect $200. What does the proposal say?
Right. So the Israeli exit tax is a complicated mechanism, I would say, where if one is breaking residency from Israel, then a day before one, again, and it's a very important point, a day before one leaves the country, there is a tax event in Israel. Okay. But the current version of the law provides for the possibility to technically write the check to the Israeli tax authorities upon the sale or upon exercise of the asset. Which is very logical, because if you don't have the cash,
you don't have the cash. Right. You're exactly. You're a high tech entrepreneur. You've got a big stake in your company. You leave, but that stake's completely illiquid. What are you going to do?
Exactly, and it's also interesting to mention that when you do sell your company, in your example of that tech entrepreneur, the tax liability in Israel would not be calculated based on the value at the time that you relocate, but it would be based on a linear, exactly on a linear basis.
On a linear basis, okay. So they measure the proportion of time you were in Israel versus the time outside of Israel during the holding period of the asset, and then they give you tax on a proportion.
Exactly, a very technical and dry, so to speak, test. Now, the problem with it is that the Israeli tax authorities have almost not collected anything from the exit tax.
It's great in theory, not so great for the tax office in practice.
Terrible in practice. Don't ask me why, but for some reason people are simply
nobody pays.
Nobody pays.
Nobody in Palo Alto has been sending checks to the tax authority.
Exactly. So when people are out there, they're just out apparently in reality, and that's what they're trying to change. So. Okay. I think that the main message that should be reflected to our audience is that the post-tax reform, for anyone who owns assets that are in the value of 3 million shekels or more, which is nowadays approximately $1 million USD, there would be complicated technical mechanism that would stipulate that you, for a certain portion of your assets, primarily tradable stocks, you would need to pay effectively or to pay an advance payment on the spot, and for other assets, either immovable property that is like foreign immovable property out of Israel or other assets, you would either need to leave a certain advance payment with a trustee or to report in some way of a wealth declaration to the Israeli tax authority. So it becomes a very, very technical and bureaucratic,
and onerous, yes,
an onerous situation. I know for a fact that for a few of our clients that has actually been, that are considering to go out, this has been sort of like an incentive to leave the country before the legislation.
Right.
Again, not to be part of this ongoing, never-ending compliance situation.
So if you're thinking of making Aliya, get here quick. And if sadly you might be considering making Yerida, get out quick.
Exactly.
Okay, not that we want to encourage people leaving as well. We want all the good people to stay here. Okay, and now to the question that it's probably everybody's focused on, because there is only two things certain in life, and those are death and taxes. Right. Is there going to be an inheritance tax in Israel?
So that's also a question that we hear quite often. The short answer is no. There is no current expectation. Yeah, there is no current expectation for Israeli inheritance tax, but the purpose or the intention of the Israeli tax authorities is to cancel a current, I would say, a distortion or inequality situation. I'll try to explain. So, for example, me, when I inherited a number of shares from my Australian grandmother, then I got a step up in value when the assets arrived into the country. However, when an Israeli tax resident passes away, because bequeath is not defined as a tax event in Israel, so when an asset is leaving the country, there is no tax event based on where the legislation currently stands. So they are not going to cancel. I mean, there would not be inheritance tax per se, okay? But they are in all likelihood going to cancel the step up for assets that are coming into the country. And then that way it would be parallel. You would not get a step up in value, and there would still be no tax.
In your example, your grandmother in Australia bought the shares for $10. When she died, they were worth $1,000. You sell them for $1,100. You're not going to be paying tax just on the difference between $1,000 and $1,100. You're going to be paying tax on the difference between $1,100 and the $10 she originally paid for them.
Yes, in the absence of a step up, that's what's going to happen.
That's okay. All right. Yeah. Okay. Very, very important. So what is the timetable for all this? When do you expect, given the state of the process, that this will all take effect?
Right. So as you are aware, I mean, currently the government is hectically busy with COVID regulations that I don't think that anyone can actually understand. But the current expectation is that
that makes them only slightly worse than the tax regulations. Because nobody, well, you can understand, the rest of us can't.
Right. So I think that I mean, a realistic expectation would be that the legislation would move forward throughout 2022 and would become effective during 2023. That's the current realistic expectation. Obviously, it's all agile and fluid, and there is no certainty, but that's a realistic expectation at the moment. Okay.
So people that are interested in taking action now have some time to do so between now and really the end of the year, it would seem, based on what we know right now. Okay. Yeah. So for those who who are listening to this podcast and saying, okay, so Harel, so what do I do? What would be some of the things that you would think people should be at the very least considering or talking to a professional about at this juncture?
Right. So I think that for those who are seriously considering on making Aliya, 2022 may actually be not a good year to make Aliya.
That's and there are some tents that you can live in because you can't find an apartment here for love nor money, but we'll set up a tent for you somewhere in the desert and it's going to be fine. Don't worry about it. It's going to be fine.
Yeah, glamping. That's that's a realistic option.
Right, exactly. We're going to show up with coffee, a cappuccino in the morning. I'll have fuch, as we call it.
Yeah. So that's probably one thing.
Okay.
In addition to that, and this is a bit like off topic, but there are numerous corporate changes. So for those who are very active in business, or soon will be leaving will be out of their 10 years tax holiday, and they have structures that involve complicated non-Israeli structures, then the changes would also be for sure relevant. So that I would advise them to follow up and to see where things go, because it's not only the individual part, of course, although there is a strong focus on individuals. And at a broader level, probably just to stay tuned and to remember that despite the fact that we are dealing with a very, very advanced version of the of a very advanced legislation draft, there might be some still like changes in the Knesset or in by the head of the Israeli tax authorities.
Okay.
So stay tuned. I mean, I think that's probably the
takeaway lessons. Fantastic.
Yeah.
And of course, always, people should consult with Harel Tow or their professionals before making any sudden moves or decisions. Harel, thank you so much. It's a real pleasure. Next time will be your third time on the podcast, and at that point we're going to have ice cream, because that's what they say in Israel. Third time, for some reason, you get an ice cream. Never worked out why. Do you know why? I have no idea.
No, but I owe you an answer.
And I might owe you an ice cream. Okay. So thanks to Harel, and also thank you to Sarah Ross, the fantastic Sarah Ross, for helping to put this together. And at our end, thanks to Andrea Herman, who's our producer, to Josh Schlesinger, our editor, and to Mayor Charlotte, who is the newest member of our podcast team. So thanks to all of you guys, and for all your hard work. And look out for more episodes coming your way. You can listen to this on Apple, Google, Spotify, anywhere you see podcasts, and also on YouTube and on our website, goldrockcap.com. Thanks, everybody. Thanks, Harel.
Thank you very much for inviting me, Darren. Have a great weekend.
It's a pleasure. You too. Have a great weekend. Bye-bye.